And here to talk signals in the charts, Katie Stockton, founder and managing partner for Fairlead Strategies. She's also a CNBC contributor. Katie, some of our viewers pointing out we are 4,100 on the S&P. That's surprising to you at this point? We don't expect you to be able to say buy at 3,800, sell at 4,100. But you know, you've been sort of positioned bearishly for a while. Are we missing something by following your advice, or are you going to be right in the end, do you think?
You know, it's been a range-bound market really overall, and I think that's where a lot of the frustration comes from for me and for many of us who are investing in the equity market here. We've had short-term upswings and downswings that have been pretty notable, including the latest upswing. So it definitely has surprised me in terms of the magnitude, but we don't have the evidence yet that we're out of the bear market cycle. The good news is that we're closer to that. So for the S&P 500, the level that we're watching is about 41.55 now, and that is a very key resistance level on the chart. You know, we track something called the cloud model. If we were to see a couple of good weekly closes above that level, that would effectively reverse the downtrend that began early last year for the S&P 500. So that would be a big deal in terms of levels. And there's a couple of other things that we have on our radar that could suggest that we're shifting here, one of which is the VIX, or volatility index, and that still has support intact around 1845. So yet another very key level. It's not terribly far away at this time. And if we were to see the VIX take that out, that would reflect a shift in market sentiment. And that would be something that could also be perceived as bullish as well. That's
weird. So a weak VIX could actually end up being bullish instead of us looking for that washout back up in the mid-30s. Have you moved any support levels on the S&P? Have you moved any of those up? Is that something you do as we stay above certain levels for a period of time?
Yeah, the levels are definitely dynamic in that, you know, some become evident as things progress. For the S&P 500, the major support does remain around that 3505 level, and we still really cannot rule that out as long as this bear market cycle is intact. So I don't think we're out of the woods as of yet. In the interim, there is support at the December lows, which were tested successfully in March. So that successful test in March of about the 3,800 level made it evident that that's a key level as well. Not as important as the 3505, but definitely something that if we were to see a breakdown below that level, that would then increase downside risk. I would make a point about this latest relief rally that we've seen from the equity market, that it has been associated with improved market breadth. But that improvement is now such that the sort of oscillating measures of market breadth or participation are somewhat overbought. So that creates yet another proving ground for the market. We've watched things like the McClellan oscillator, the cumulative advanced decline line, and those haven't really proven to advance from their downtrends yet.